Okay, and welcome back, students who are taking financial accounting, and we're working on the Chapter 2 short exercises. And so without further ado, let's jump down to where we left off, which was problem 10, exercise 10. Okay, it says here, Cindy Anderson opened a dental practice in Spokane, Washington as a corporation. The following transactions took place in August. Using the steps outlined in the 5-step transaction analysis, record the transactions in the journal. So what they're saying here is in the textbook, in the chapter, they show a 5-step process. And I'm not going to show that process. I'm going to talk through it in the way, makes the most amount of sense to me. Okay. And basically the process that I do. If you want to follow that one in the book, you're going to arrive at the same answer, the same journal entry, and that's fine. You do whatever's comfortable for you, but I'm giving you an alternative way of thinking about how to make journal entries instead of following a step-by-step process, because if you follow it step by step, you're going to have to make decisions which could be wrong, okay? And also, too, you might have a tendency to mimic and not see, and look for things in a book, which is, you're going to, run up against it, because whenever you have an entry that you've never seen before, you're going to have to think through a process, okay? And the step process, like I said, you're going to have to make decisions. Well, in using my process, you're going to make less decisions because you back into things, okay? So I had a theory video on how to make journal entries in this chapter, okay? So look under chapter 2 and watch the theory videos to see how, a detailed approach to how I make journal entries. I'm not going to go through it all, but I am going to work through these transactions utilizing that process. So August 1st, when I make a journal entry, I have to put the date. Oops. And I always put my debits first. So I'm going to have a debit, and then I'm going to have my credits. Okay. Also realize that when I make my debit, I'm going to put the account name flush left, but when I put the account name for the credit, I'm going to indent the credit. Okay. And the same thing is going to apply for the amounts. I'm going to put an amount in a left-hand column and the amounts in the right-hand column. So this column is going to be like my debits, and this column is going to be my credits. Okay. Now, if you're looking at a 2-column journal paper, okay, you're only going to see 2 columns like this. Okay, and that's fine. Just use those 2 columns. But the lines on the paper doesn't matter. If you had 4 columns, you can use that 4-column journal paper because you'd only use the 2 columns. You wouldn't use these 2. You just leave them blank. Okay, so it doesn't matter so much about the lines on the paper. And as you can see, I'm using a blank screen here. Okay, but the formatting of the journal entries is going to be correct. It needs to be correct. Otherwise, you can't tell what your debits and your credits are. You're going to have a question. Sure, you might know, but you don't know what the person's intent was. Okay, so you have to take, when you think about the information, even though you have knowledge and you can say, okay, this is what I'm thinking, this is what they should have done, that doesn't necessarily mean that's what they actually did. So you take things for face value. What's written is what is. You don't second guess stuff, okay, when it comes to accounting. So here it's saying sold $50,000 of common stock to Anderson to start the business. Well, what does that mean? Well, if they're selling the common stock, that means they're receiving cash. So the first thing I ask is, am I affecting cash? And in this case here, the answer to that question is yes. So I know that I'm going to be using cash, and since my cash was an amount before and now it increased 50,000, well, cash is an asset, and I increased the assets on the debit side, so that means I'm going to debit my cash. Oops. I'm going to debit my cash for $50,000. Okay. Now, here's where I veer from, part of why I veer from, the 5-step process, because I know that my debits must equal my credits, okay? So I have to have either one or more accounts that total up into credits. And all I need to do is think about the transaction and find the category of account that makes the most amount of sense and pick out the ledger account under that category. So in this case here, they're telling us that they're buying common stock. Well, common stock is an equity account, stockholders' equity, and one of the accounts is common stock, so I know that I'm going to credit common stock for the $50,000. And notice what just happened. Because I thought through cash as a debit, I didn't have to think about whether the common stock was a credit or a debit. I backed into it. I automatically figured out whether that should be a debit or credit. What a lot of students have a difficult time with is when they're looking at the transaction, they'll read it like this. So it's $50,000 of common stock to Anderson to start the business. And immediately they start with the second half of the transaction, the common stock, because the words are right there. And then they're sitting there trying to figure out, well, whether that's a debit or a credit. And depending whether they get it right or wrong, then they're sitting there going, I know that they have to, equal, but what else am I doing here? And they just get themselves further and further in the hole because they're thinking from the second half of the transaction first. Think about cash first. Cash, most of the transactions are made up of cash. Then the next most are made up of accounts receivable or accounts payable. Okay? If you think in terms of, does this affect cash, or does this affect accounts receivable, accounts payable? That's the majority of your transactions. And then you just back into the other half of the transaction, and you don't have to be figuring out whether it's a debit or a credit. Okay? So that's what that transaction looks like. Okay? And then you can write the description down as sold stock. Okay? Now, theoretically, all journal entries should have a description, and the description meaning what occurred in the transaction. But the reality of it is that with computers and stuff, and the majority of, let's say you're paying rent, so you have a debit to rent expense and a credit to cash. You don't need a description to say I'm paying rent, because the accounts themselves tell you what you're doing. You're paying rent. So a lot of the times you're not going to actually write a description. You will write descriptions when it's complicated. When the numbers that you're using, have to be figured out, you'll write a description explaining how the numbers are arrived at, or why the accounts you are using, or any details that you need, whether it's dates or people or whatever. Okay, think about the description of a journal entry as a narrative for that particular transaction. Anybody who sees this journal entry can read the description and understand what that transaction was about. And because that's can be multiple lined, meaning like a paragraph, you only really write the descriptions for journal entries that are out of the ordinary, that aren't really simplistic. Okay, so that's this first transaction. Let's go on to the next one. Okay, August 5th, so I put my date. Purchased dental supplies on account for $6,300. Okay, so the first question I'm asking myself is, am I affecting cash? And in this case here, my answer is no, all right, because I'm not buying them with cash, I'm buying them on account, right? That means I'm buying it on credit. So my second question is, am I affecting accounts receivable or accounts payable? Well, I'm purchasing them, okay? So I'm purchasing on account. I'm wanting credit from a vendor, right? So I'm going to be using accounts payable. Well, I have a debit and I have a credit, and accounts payable is a liability, and I increase my liabilities on the credit side. So I have a credit to accounts payable for $6,300. Now, debits have to equal credits. Well, if I have a credit for $6,300, that means I have to debit something else for $6,300. Well, what am I going to debit? Well, in this case here, it's telling me I'm purchasing dental supplies. Okay. And if I know that dental supplies would be something I own because I'm inventorying them, and that would be an asset, right? And I'd look under the asset accounts and I'd see whatever the general ledger accounts are. And in this case here, they're saying we have a general ledger account called dental supplies. So notice that because I know that debits equal credits, when I have my credit, I automatically back into my debit account. I automatically back into my debit, and all I need to do is just put down the general ledger account. Okay, so that's that transaction, and I'm erasing it. If you have any questions, and you don't understand something, feel free to contact an instructor. Okay, 8/7. So we put the date, August 7th. Paid monthly office rent of $1,000. Okay, so we're paying it, we're paying our rent for the month. Well, am I affecting cash? Yes. Okay. Cash is an asset, and I increase my assets on the debit side. Well, if I'm paying cash, am I increasing or decreasing it? Well, I'm decreasing my cash. So if I increase my cash on the debit side, I decrease it on the credit side. So I'm going to credit cash, and in this case it's $1,000. Well, since debits have to equal credits, I have to have a debit of $1,000 someplace else. What's it for? I'm paying office rent. Well, it's paid monthly. I'm paying my rent for the operation of the business. So I would look underneath my expense accounts and I'd find the rent expense account. And that would be the debit. Okay? Because debits have to equal credits, notice how I backed into the debit. I didn't have to think about whether I'm debiting rent expense or not. I automatically know what it is. Okay? All right, so I'm erasing that and doing the last one here. August 10th. So put the date. Okay, provide $3,800 of dental services. Provided $3,800 of dental services to patients. Received cash of $1,200 for these services and sent bills to patients for the remainder. Okay. Now notice here that this here is going to become a little bit more complicated. So far our journal entries have been debits, and one debit and one credit. Okay, but in this case here, like I said, it's going to be a little bit more complicated. So the first question I ask is, am I affecting cash? And the answer to that is yes. Okay, it says here, received cash of $1,200. Okay, well, if I receive cash for $1,200 and I know that I increase my cash on the debit side, okay, so I'm going to have a debit to cash for $1,200. That means I have to credit something else, right? What am I going to credit? Before I go there, well, okay, I can go there, and this is where you have to deviate. I'm going to credit something else. What am I going to credit? Okay. Well, what am the people paying for? Well, they're paying $3,800 for dental services. Okay, so that's that's revenue, dental service revenue. Okay, so I have, we'll call it service revenue because I'm providing the service, and that's for the amount of $3,800. Okay. Now, like I said, when you have debits, they have to equal your credits. So if I had a debit for $1,200, and that means I have to credit something else. When I'm crediting it, I'm crediting it for $3,800. Notice that they're not equal yet, right? Debits must equal credits. Well, if my debits don't equal the total of the credits here, obviously I'm going to have to debit something else in order to get them to equal, because obviously I have to get to $3,800 for the credit. Well, what am I going to debit? Well, I had asked the question, one, am I affecting cash? And the answer was yes, so I provided the cash account. My second question is, am I affecting accounts receivable or accounts payable? Well, in this case here, it says it received cash for $1,200 and sent bills to patients for the remainder, meaning we extended them credit, okay? That the remaining amount is on account. So the remaining amount was $1,600, and that's an accounts receivable, okay? So notice how I went about creating this journal entry, and this now is a 3-line journal entry and not a 2-line journal entry, okay? You start out by asking, I could have went through the process of cash first and came up with the 1,200, and then second said, okay, accounts receivable, and put in my accounts receivable, and then figured out what my, since my total of my debits should equal my credits. Notice I had to do a mathematical calculation to get the 1,600 here, because I was only given 1,200 and I was given $3,800. I had to figure out the $1,600. Well, by figuring out the cash first and then doing the receivable, then I could come back and do the accounts. By figuring out the cash and then figuring out the service revenue, I could come back and do the accounts receivable, because that's the mathematical calculation of it. But whichever way you decide to do it, whether you decide to do the cash and the receivables and do the math to get the 3,600 and then know that you have to credit service revenue, both ways you end up in the same exact spot, okay? But you're going to see the multiple line journal entries an awful lot. You can't think that all journal entries are just going to be 2 lines. When you're talking about payroll entries can be 7, 8, 9, 10 lines at a time, okay? And you just keep in mind that debits have to equal credits, and you look at each and every part of that transaction and account for all of the parts of the transactions, making sure that the debits equal the credits. Okay, so with that, I'm done with this video, and notice it said 10 to 15 minutes and I'm at 17 minutes, so I'm right on track. See you in the next video for the next problem.